Assalamualaikum and a very good day to our lecturer and fellow classmates. Today, our group will be presenting on the topic of Sharia governance in Islamic banking institutions in Malaysia. First of all, Islamic banking in Malaysia has developed rapidly and become one of the most important parts of the country's financial system. Malaysia is also internationally recognized as one of the leading countries in Islamic finance because of its strong legal and regulatory framework. Unlike conventional banking, Islamic banking must comply with Sharia principle. This means that Islamic financial institutions are prohibited from involving elements such as riba, gharar, and maisir. Therefore, Islamic financial institutions must ensure that all their operations, financial product, and business activities comply fully with Sharia principles. To ensure proper compliance, Malaysia introduced several laws and regulatory guidelines governing Islamic financial institutions. Then, the next presenter will explain the legal framework governing Islamic banking in Malaysia. Assalamualaikum and a very
Thank you. One of the most important legislations governing Islamic banking in Malaysia is the Islamic Financial Services Act 2013, also known as IFSA 2013. IFSA 2013 acts as the primary legislation regulating Islamic banking and finance in Malaysia. One important feature of this act is that Sharia compliance is treated as a legal obligation instead of merely an ethical or religious expectation. Section 28 of IZZAH 2013 clearly states that Islamic financial institutions must ensure that all businesses, activities, and operations comply with Sharia principles at all times. In situations involving Sharia non-compliance, the institution is required to notify Bank Negara Malaysia immediately, stop the non-compliant activity, and take corrective measures. This provision is important because it creates legal accountability and helps maintain public confidence in Islamic banking institutions. Apart from IFSA 2013, Bank Negara Malaysia also plays a major role in supervising Islamic financial institutions. Bank Negara Malaysia acts as the central regulatory authority responsible for ensuring that Islamic banking operations remain consistent with Sharia principles. In 2019, Bank Negara Malaysia introduced the Sharia Governance Policy document, which outlines responsibilities relating to accountability, transparency, Sharia risk management, Sharia review, and Sharia audit. These measures help strengthen the integrity and credibility of Islamic banking institutions in Malaysia. The next presenter will discuss the role of the Sharia Advisory Council and the Sharia Committee.
Thank you. Another important institution in Malaysia's Islamic finance system is the Sharia Advisory Council, also known as the SAC. The SAC is recognized as the highest authority on Sharia matters relating to Islamic finance in Malaysia. Its role is to ensure its consistency and uniformity in the interpretation of Sharia principles among Islamic financial institutions. Under the Central Bank of Malaysia Act 2009, courts and arbitrators may refer Sharia-related issues to SAC for determination. This helps avoid conflicting interpretation and promotes legal uncertainty within the Islamic finance industry. Apart from the SAC, every Islamic financial institution is also required to establish its own Sharia committee. The Shariah Committee is responsible for reviewing banking products, supervising operations, monitoring Shariah compliance, and advising institutions on Shariah matters. The committee also helps identify Shariah non-compliant risks and advises institutions on corrective measures whenever necessary. Therefore, both the SAC and the Shariah Committee play important roles in maintaining Shariah compliance in Islamic banking institutions. The next presenter will discuss the legal issues faced in the implementation of the Shariah governance.
Although Malaysia has strong Sharia government frameworks, several legal issues still arise in its implementation. The first issue is non-Sharia compliance risk, also known as NCSR. This NCSR refers to the legal, financial, reputational risk faced by the Islamic financial institution when their operation or product fail to comply with the Sharia principle, which is example includes improper documentation, defective contract, failure to obtain proper Sharia approval, and operational mistake during the contract execution. This issue may expose Islamic bank to the financial losses and reputation damage and legal dispute. The second issue is concerning the independence of Sharia committee. Although the committee is expected to act independently, members are appointed and paid by the institution itself. This may create conflict of interest and can affect the objectivity of Sharia-related decision. In some institutions, recommendations are made by the Sharia committee are treated merely as an advisory opinion, may be ignored or delayed by the management. Another issue is inconsistent in Sharia interpretation among Islamic financial institutions. So different institutions may interpret Sharia principle differently regarding the financing structures such as tawarruk, murabahah, and sukuk agreements. Sukuk arrangement. As a result, similar product may receive different Sharia rulings across different banks. This may confuse the customer and weaken the public confidence in Islamic banking products. So the next presenter will discuss the suggestion and improvement for strengthening the Sharia governance in Malaysia.
Thank you to Hassanah. Now I proceed with the conclusion of the video. In order to improve the effectiveness of Sharia governance in Malaysia, several improvements can be implemented. First, Malaysia should strengthen the Sharia governance policy document and improve the existing regulatory framework. Clearer guidelines should also be introduced for emerging sectors such as Islamic fintech, digital assets, and ESG-linked products. Second, the independence and accountability of the Sharia Committee should be enhanced. Stricter rules regarding conflict of interest and dual appointment should be introduced to improve transparency and objectivity. In addition, Islamic financial institutions should provide clear disclosure regarding Sharia compliance and corrective action. Malaysia should also strengthen coordination between Bank Negara Malaysia, the Sharia Advisory Council and Islamic financial institutions. Standardized Sharia rulings and model contracts can help reduce inconsistency within the industry and strengthen public confidence. In conclusion, Sharia governance plays an important role in ensuring that Islamic banking institutions operate according to Sharia principles. Although Malaysia already has a strong legal framework, several legal and practical challenges still exist in its implementation. Therefore, continuous improvement in governance, transparency, accountability and standardization are necessary to maintain public trust and support the future growth of Islamic banking in Malaysia. With that, I conclude.